All right. Did you say hello?
So we getting ready to
Oh.
start. We live.
Yep.
All right. Welcome once again, Facebook live people and podcast people. How y'all doing? Time for another episode of Things My Mother Never Told Me. We got another one, our special guest.
Ooh.
For some reason, you say like all of them special.
Yes, they are. We alive too. The Lord think we special.
All right.
We were worth dying for, that's for
Yeah,
sure.
we got
Praise God.
Ron Betty with us. Tanya's going to read your bio, and then we're going to jump right on into the podcast. Sir.
All right then. So we have Mr. Ron Betty. He's an insurance professional with over 20 years of experience in the industry. Ron's insurance career began in the late 1990s as a licensed life sales agent for American Income Life Insurance Company. He later would work as a licensed internal sales and sales representative for AAA Michigan. He left AAA in 2001 and began a 16 plus year career at State Farm Insurance. After leaving State Farm Corporate, Ron attained both his PC and L&H licenses to pursue a career in agency. He opened Goosehead Insurance, Ron Beatty's agency, in November of 2018 in Southfield, Michigan. He is a full-service insurance brokerage selling auto, home, life, and commercial products. He prides himself on educating his clients on insurance principles and providing outstanding customer service. He is married to Monique and has two teenage children. Woo, woo, woo. He is a member of Southfield Alumni Chapter of Kappa Alpha Psi, secretary of the nonprofit Mish Ramp, and coaches fast pitch softball with the Oakland Cobras organization. All right, Mr. Ryan, you a busy man.
Now that guy did sound special.
Yes, he did.
Welcome, Ron. How you doing?
I'm doing great. So glad to finally make this happen.
Yes, sir.
Oh,
yes, sir.
yeah.
Well, you got some stuff that people really need to hear about.
Yeah.
Before we get to the meat with these potatoes, we're going to do some real quick. Where did you go to school?
So I went to college at the University of Michigan in Ann Arbor.
All right.
And before that, I attended the University of Detroit Jesuit High School right there in Detroit
All right.
on 7 Mile Road.
All right.
Okay.
Yep.
Cool. And so you of them. Well,
Yeah,
Yeah,
I know. Well, we go.
Don't start. Don't start. We getting enough bashing right now. Don't start.
I know that's
right. But that's all right. A lot of young folks who strive to make it to U of M. So congrats for that. So one of the things that Tina didn't read about, you started out at you were at AAA, but you started out as you went to State Farm. And so give us a little background on what you were doing while you were at State Farm. Because I mean I couldn't go to anything without seeing you there.
Right. Yeah. So with State Farm, prior to getting there, I thought the only careers you could really have in insurance is either selling or you doing claims, right? That's the only two things you can really do in insurance. But
that's what I did. Claims.
yeah. So once I got to State Farm, I realized that there was a plethora of different career paths that you could take, and I started in claims for the first 3 years. I did bodily injury and property damage claims, which I think gave me a really nice foundation to what I'm doing now. But then after that third year, I realized I really wasn't the kind of person that could sit at a desk for 8.5 hours a day and just take, call after call and repetition. So I started to say, okay, what else can I do here? And I love the community activism and volunteering.
Right.
So I applied for a public affairs community specialist position.
Okay.
And so I got it, and I did that for the remainder of my career with State Farm, both on a local level here in Southeast Michigan and on a national level for the last 5 years of my career there.
All right.
So it was very rewarding.
Yeah, I'm sure it was. And you got to
Yeah,
get out
look
and
at
rub
you now.
elbows.
I did, yeah. I was able to go to all the local chicken dinners here in Detroit. And I mean, but we did some really good things in the community. I was real active with Habitat for Humanity and Rebuilding Together Detroit. I was on their board. I mean, you name it. I was really passionate about child passenger safety.
Yes.
Yeah, I was a certified child passenger safety technician, which was great because at the time I had a infant and a 3 or 4-year-old, so I knew how to make sure that my kids were buckled in properly.
Right.
And so it's been really rewarding, from being on roofs, building roofs, and buckling kids in, to putting in smoke detectors during Devil's Night. It was
All right.
Very
Yeah,
good. 'Cause
yeah.
I was telling my sister, she was coming over. She was coming over to my house, and I said, "Now you got a 2-year-old and a 5-year-old. But that 5-year-old need a booster seat."
Mm-hmm.
You know, she was up there saying, well, I gotta call and see. I said, well, they can't get in my car until she gets a booster seat."
Yeah, I still cringe when I look over and I see, small children in the front seat, or kids sitting on other kids' laps, and it's just, all the studies show that if you buckle them in properly, they'll most likely survive almost any accident. But when they're not, it's tragic.
Right. And every time we get behind the wheel, we gotta drive and act like it might be an accident.
Yes, defensive driving.
Right. Cool. So then you left State Farm.
Well, I wouldn't say I left State Farm. Okay.
There you go.
So the first thing that you say, things my mother never told me. So
Yeah.
of course I'm thinking 16 years, I'm gonna retire from State Farm, right? I'm drinking the Kool-Aid, I'm singing the songs. Me and Jake were like, best friends. And then I get a call on a Friday at like 4 p.m. saying, "Hey, your office is gonna close there in Livonia, Michigan. And we need to know if you want to move to Atlanta, and we need you to tell us by like next Thursday."
Oh, wow.
So like 16 years, and they gave me 5 or 6 days to tell them if I was gonna pack up my whole family and move to Atlanta.
Yeah.
And I had thought about it. We talked about it, but I'm a Michigan guy.
Yeah. Yeah.
So I had to reinvent myself.
Okay. And you know what? I guess because it wasn't my life, but I remember that now. Now that you're saying, I remember that. Sometimes we don't remember stuff that ain't us. And so then with that happening, so how did this reinvention occur? How did you get started with that process?
So initially I'm thinking, okay, well, I do have some skill sets and expertise that could translate to some other companies here locally in Detroit. So I, made a few calls, because of course I've been giving money away and going to chicken dinners and shaking hands with people right for the last 12 years. Right. So I'm like, it shouldn't be a big thing for me to get a couple of interviews, and I'll have my pick of where I want to go and finish out my corporate career.
Right.
But I don't know if it was a timing thing or what, but I really couldn't get through the door anywhere. Couldn't get sniffs.
Wow.
So then I was like, you know what? I had these, I don't know if you can see them, I'll flash them back here. That one and that one.
Yeah.
I was down in the basement on the treadmill, just, that was on the way back then. I need to get on there now, but that was the way where I just kind of can isolate and think like, what's going to be my next move.
Right.
And so those two things you saw on the wall there, they were just sitting up on the floor in the basement, just full of dust and dirt.
I know that piece
spider
of
webs.
LNH.
Yeah, so I worked real hard for those. They're basically,
that's right.
They're like having the equivalent of a master's degree in both life insurance and property and casualty insurance.
Okay.
And they were just sitting on my basement floor collecting dust. And I had an epiphany, and I would like to say I was guided by the Lord, of course,
Yes.
to say, you need somewhere to hang those. You work real hard for them. And then from that, I got off that treadmill and I went upstairs and told my wife, like, I'm gonna open my own insurance agency.
All right.
Wow.
And that's how it started.
And she was with it.
Thank you. I know that's right.
She said, "Well, how much money are you gonna make?" She got to the practical real fast.
Yeah.
But
That's right.
She's been very supportive at every stage of my career, and I wouldn't have been able to do it, without her blessing and the kids' blessing, because I knew it was gonna be tough work.
Right. And it's good that you said that you like to say that it was God's blessing, because, like you were saying, with all the people that you met along the way and all the things you were doing and the people that you helped, and then when it's your time for somebody to do something for you, can't nobody help you. I think that was God's way of saying, look here.
You don't need
that
them.
stuff right here.
You know what everybody kept saying? "Oh, you'll be fine. Oh, you'll be fine.
It
Oh,
will
you're
be
a great guy. You'll be fine."
And they didn't lie.
Yeah.
But I had to do it on my own. I had to put on my
Right.
big boy pants. So.
Yeah, that's right.
Mhm.
Right. Well, he got
Sometimes,
you
yeah.
to a point, and so now it's time for you to make that step.
Right.
And so how's it been?
It's been very rewarding. You know, I never pictured myself as an entrepreneur, self-employed businessman, but
CEO.
uh, CEO. You know, sometimes I say, do I want to give myself a day off? Then, then I look at my bank account and say, no, I can't have that day off.
Yeah,
so,
yeah,
so
yeah.
it's a lot to get used to, but it's
Mhm.
very, very rewarding. And you can work as long and as hard and as much as you want. And I mean, basically, your income is limitless. You,
Okay.
you can
Mhm.
make as much as you can make.
Yeah. All right.
Don't worry. After this, you'll be really booming.
I'm counting on it. Maybe I have to start sponsoring the show. Y'all can put my logo back there.
Yeah,
No,
yeah.
that's right.
Now that'll work.
But
So-
yeah, I put that in the atmosphere.
That's right.
Mhm.
Okay, so let's get to one of the things I know you're passionate about. You got some items that you want to discuss with the listeners to give them some insight into what's happening with the insurance industry and how they can make it work for them. So go ahead and jump into that if you would.
Okay, so what I did was I kind of created Ron's Insurance Top 10. So these are 10 things that I wanted to make sure that I got on the show today that people need to hear or that they can follow up with me later about, but that I thought were very important and especially for our community.
Yes.
Yes.
Okay. So the very first item I have is the cornerstone of any insurance portfolio is life insurance.
Okay.
Okay.
Right.
So many people think that their biggest asset is their house, but that's not true.
Right.
Your biggest asset is actually you and your salary. Okay. Because without you and your salary, that house wouldn't even exist.
That's right.
So before you insure your home and your cars and your jewelry, you make sure you have some life insurance on yourself.
Yeah.
Right. So, we all been there where we had to do the GoFundMe's and the pass
Oh
the
my
hats
God.
just because,
Right.
we didn't prepare.
Right.
Mhm.
And
Mhm.
right. And that's amazing that people keep doing that. At least get minimal if something, but have something on you.
Have
Right.
something. Yeah. Don't be a burden to your family and friends.
Yeah.
At least take care of your final expenses.
Yeah.
Yes.
But not just that. I mean, this is really a way to pass on generational wealth. Right. So if you
Okay.
do it right and you do it early enough, you can accumulate enough money when you pass away, or even cashing it out before you pass away, that you can really leave a nice nest egg for your legacy for your next generation.
Okay.
Yeah, our daughter asked us cause she put in some insurance on us. I said yes. You know what I'm
Right.
saying? If you
Yeah.
ain't trying to kill me within the year, you know what I'm saying?
Exactly. You said within the year. No, exactly. I
And
mean,
I'll sign the papers, you know what I'm saying? Because like you
there's
said, I ain't about to put 250,000 on me. You know what I'm
right.
saying? But if you can afford to do that, then go
There's
for it.
other communities that's how they do it.
Mhm.
Yes, they do.
It's an inexpensive way to do it, and actually, it's a tax-free way to do it.
Right.
So
So
it's
that's
a
what I
very
told her. I
it's a
said,
smart way to do
yeah,
it.
we're supposed to sign the papers when we come down there.
That's right.
Whatever.
Hey, look, she love us. I don't think she's gonna. I mean, I don't think
Uh-huh.
it's another Lifetime movie.
So, and as you saw on my bio, I actually got my start in life insurance. So that was my first taste of insurance.
Right.
Like, so I don't know any child who grows up and say, you know what, I'm going to be an insurance guy when I grow up. That's just one of those
Right.
careers you kind of trip into
Right.
because somebody was talking to you about it and was like, oh, you can make this much money and do this. So
Right.
Mhm.
So I want to take a quick segue because
Okay.
I meant to ask you that. So how did you get into insurance?
Yeah, so I went to UAD, went to Michigan. So this was the first thing my mama never told me. And you set me up for this because I know my mama's listening, so she gonna but
We ask all our guests that question.
I know. So, I'm like, okay, I went to Michigan, so I'm gonna walk across the stage and then people are gonna just knock down my door with some great careers and I'll just again pick which one I want, right?
Right.
And that wasn't necessarily the case. I didn't do all the things while I was at school that I should have to prepare for my career. So I would come home in the summer and just get a job somewhere just to make some money so I have some cash when I go back to school.
Mhm.
we didn't necessarily know about all the internship
Internships.
programs, and you know what I'm saying? So that's one thing that we need to talk to our kids about. And I have a senior in high school right now, and I'm
Okay.
telling her, this you have to, it's 4 years, it goes by really quick, and you
Right.
have to plan and be prepared.
Mm-hmm.
And if you don't get those internships, once you walk across that stage, you applying like everybody else
Right.
Yes.
Right.
who didn't go there. So
Mm-hmm.
so I
And
wasn't
they had the
necessarily,
experience and the
and they
other.
got some job experience, right? And I didn't. So I started, I mean, my first 2 years, I probably had like 7 W-2s come to the house. I did everything from, I worked at a graphics company. Waited some tables. I worked at Blockbuster. I mean, whatever I had to do, right?
Right. That's
All
right.
right,
That's
starving artists.
I mean, I was trying to get out of my mama's basement. She was trying to put me
I
out of her
hear you.
basement.
I know that's.
And so I started, so I was working for a graphics company, and a good friend of mine, a guy who went to his church, was a life insurance agent. And he was looking for some new young talent. And he put me in touch with him and told me that this was something I could really do and get behind. So I left my company job. Wasn't making that much anyway, but
Mhm.
so I took a chance and tried it out. And actually, I wasn't bad at it. But what I didn't know was, one, like, our community really doesn't like to buy life insurance.
Yes.
Right.
Like, the
Mhm.
husbands and fathers don't even want to talk about it, right?
Yeah. Right.
They always say, what, you can bury me in the backyard,
I know.
or I won't be here, I don't care, right?
Mhm.
Right.
And so I leave, and then the wife calls me and be like, we gonna get that policy.
And we're gonna cash it in
Right.
next week.
And I'm talking about, I'm just trying to put, 10,000, 20,000.
Yeah.
Yeah.
And they're like, ooh, I'm like, how much is it? It's $26 a month. And I'm looking on the table, and there's lottery tickets, and there's three satellite dishes on the house, right? But they like $26. Like, oh, that's kind of steep, man. I don't know if I can make that happen. And
Right.
then the second thing against me was, I was like a 24-year-old kid living in his mom's basement. So
Yeah.
who's gonna take life insurance? Like,
Yeah.
from a
Right.
kid, right? They're like,
You
do you
gonna
have
mess
life
it
insurance?
all up. Yeah.
Right.
You be messing it all
Right.
up.
But that was my indoctrination into insurance, and
Okay.
but and it's actually the foundation I still use today, because life insurance to me is the most important insurance you can have, and that's why I
Right.
led with that.
All right. Cool.
Yeah.
So let's get back to your list. then.
Okay. Yep. So
Great.
number 2, to piggyback on the life insurance, is buy life insurance early, and I'm talking about even for your children. Like, so the cost of life insurance is based on 2 things: your age and your health.
Mhm.
Okay. You can't stop getting older. And I guarantee you, the older you get, you're
Your
going to be
health.
less healthy, right?
Mhm.
So if you buy a policy when you 17, 21, 22, first job, put a little bit aside, perfect health, you get preferred rates. And then the good thing is, usually you have insurable interest, so you can always raise it. So,
Okay.
okay, you 22, you don't really have any assets. You take out a 20,000, 25,000, $50,000 policy, no big deal. Now you get married, you got 3 kids, you got a house. That 25, 50,000 is not going to cover you. But because you have insurable interest, even if you get sick, you can usually raise that policy at certain intervals in your life,
Right.
or
Right.
certain milestones in your life. You can raise it,
Yeah.
even if you got sick later. So
Okay.
that's why it's important to get it early. For your children, I don't even look at it as life insurance. I look at it as a savings policy,
Mhm.
right? So you get them a whole life policy as a baby. It's $16, $15, $17 a month for $50,000, and they don't touch it.
Mhm.
At age 65, they got cash value that built up over time that they can take out to put in their retirement fund. Or let's say they're 26, 27, and they want to buy a house, they can borrow against that life insurance policy or cash it in and use that for a down payment. So
This
it's
wasn't Globe
it's an
Life, was
investment.
it?
Yeah, no, that's not Globe Life. Yeah, be leery of those things you get in the mail
The
too.
mail, that's what
Talk,
I'm
talk
saying.
to a professional.
I know
It's
that's
no way
right.
you're getting $100,000 worth of life insurance for like
And
pennies a day. It's not
I
gonna happen.
know.
That's
Right.
not
Right.
real.
Right. Right.
Or
Yeah.
like you
So
said, we started out for pennies, and then next
and
thing
it
you know,
goes up.
we
Right.
drop it, and we be like, I knew it was a
Right.
scam.
Yeah. So that's one thing, and I didn't put this on my list, but you got to know the difference between term insurance and whole life
Whole
insurance.
life insurance.
Mhm.
Mhm.
Term insurance is great because you can get a lot of it, and it's not so expensive, but it
Mhm.
ends, right?
It
Yeah.
is right.
And
Term.
so I like to do a combination, right? I get you a whole lot of term while you're younger and you got kids that need to be taken care of and a house note, and then put you, enough whole life where after that term is gone, you can leave a little something and take care of your final expenses, right?
Mhm.
So you want to combine those two.
Yeah.
Yeah, that's why I told my daughter that we still healthy, so you better get it now.
Gotta get it now. Yep. Yep. So that's number two, is to buy life insurance early. Number three, insurance is designed to protect you against big losses,
Mhm.
not little losses. Okay. So it's to make you whole again from where you started,
Mhm.
but it's for the big stuff. It's think big. So even like your homeowner's insurance, you got $1,000 deductible or $1,500 deductible. Okay. Every time the wind blow hard and you lose 3 shingles and the gutter's hanging, and the guy comes out and says, "Oh, I can fix that for $1,200." And then you call and make an insurance claim. Well, you got $1,000 deductible.
Right.
So I ain't only going to give you $200. And now you
Mhm.
have now you have a claim sitting on your file, right?
Right. Right.
You get 2 or 3 of those in a short period of time, they'll kick you off the policy.
Yeah.
If you want to shop it around and try to get a better rate, every time they see, oh, he had a claim, that rate's just going to keep going higher and higher.
Okay.
So, you know, small stuff, see if you can just get it fixed, fix it yourself, do it over time. Insurance is for the big claims.
Yeah.
Same thing with car insurance. You get a little bump or a scratch, a little door ding. If it's a lease car, just right before you turn your car in, just take it and somebody can bump those out. Don't make a claim for each one of those, because
Mhm.
every time you make a claim, it's affecting your rate. in the
We
future.
know, we know.
Right. Right. Yeah.
Let's see. Number 4, insure your home and your personal property for replacement costs. Okay, so that's 2 other letters you hear about: RC, replacement costs, and then ACV, which is actual cash value. Okay, replacement cost means, if it's, say it's your house, let's say you had a total loss. Replacement cost means they will tear down the old house, clean up the entire lot, and rebuild your home. Okay, so you'll have basically a brand new home on the same lot where it was.
Yep, I
Actual
think
cash value means, well, this is how much
It's
the
worth it.
market says your house is worth.
Yeah.
Okay, so the market might say your house is worth 80,000, but to replace your house it costs 240,000. So if you have an actual cash value policy, they only gonna pay up to 80,000. So now you're gonna have a half a house where you used to have that
Oh, nice old
house,
house.
right?
Yeah.
and the difference in premium, when you look at it over time, is probably not that much. So make sure you
Okay.
get, and even on your personal property, you can get that at replacement cost. So let's say it's a partial loss, the living room gets water damage from the fire hose, blah blah blah. So you need a new couch, new TV, new curtains. Well, they're gonna say, okay, well that model was 4 years ago, so that's only worth about $120 now.
Mhm.
And that couch, I remember that from Art Van. I was on special 10 years ago, so we only gonna give you 200 for the couch.
Yeah.
As if it was replacement cost, they could say, okay, new TV, new couch, new curtains.
Right.
Yeah,
Right.
that's a big difference right
It
there.
is. So know the difference between actual cash value and replacement cost, the settlement loss. How are they going to settle this claim if I make a big claim? How are they
Right.
going to settle this?
Right.
Any questions on that?
Well, not a question, but we went through that,
We sure did.
and yeah, we had replacement costs. So yeah,
Right.
it
It makes
was
it a lot easier, doesn't it?
made a whole lot easier.
Because now you're not haggling over
I know.
And then,
trying to
then-
find receipts. And,
right, and then you was almost happy that it happened.
hey, because you're getting new stuff, right?
all new
Right.
stuff. Now I got the
Right,
latest
right.
TV.
Yeah.
Exactly. There you go. All right. Let's see. Replacement cost. Okay. Beware that make sure that your agent is aware of upgrades. So if you do upgrades to your home, you added a swimming pool, you added a deck on the back, you remodeled the basement, brand new kitchen, just make sure you tell your agent that you did that, because now the value of your home is probably going to go up.
Added
Also,
a bathroom.
right. Or, let's say you did add a swimming pool, right? Or you got a trampoline or something like that. Now you have a little bit more liability exposure, okay? Because now it's a possibility that you're not home, and the neighbor's kids like, oh, I want to take a quick jump in the pool, and something happens,
Yeah.
and then you're exposed to the liability. So
Okay.
make sure you update your agent with any kind of upgrades to your home, to your personal property. If you add, Damon says, you know what, I think Tina needs a brand new ring. And I'm not gonna be cheap. I'm gonna get the
I'm
biggest
not
ring
gonna
I
be
can
cheap
get.
this time. That's right.
So you need to call your agent and say, I got this $22,000 ring. Now, is that covered under my homeowner's policy?
Woo!
And your agent's gonna say, well, it's covered up to $1,500.
Now you know you done took me there.
So don't get me, Damon.
Yeah,
So
yeah,
and
don't
so
get
and
started
so
with
now
that.
that ring needs to be scheduled so that you get full value in case something happens to it.
Right.
So just stay in constant contact, with your agent.
Yeah. Okay.
All right.
Okay.
Next thing. Okay. I want to talk about some of the things that can impact your rate that you're getting that you probably don't know about. Okay. So things like the age of your roof. Okay. So the older your roof gets, usually the more they'll charge you because it's more likely that something's going to happen with that roof. So in Michigan, in the Midwest, I say they expect you to replace your roof about every 20 to 25
5
years.
years.
Right.
Mhm.
They give you different rates. So if you call me for a quote today and I'm gonna say, okay, well, how old is your roof? And you can say, well, I've been here since 1999, and it was probably a few years old then, and I haven't done anything with it. So when I put in the system that the roof was probably rebuilt in 1996, some of the companies are gonna just say, yeah, we're not touching it. Or we won't give you replacement costs for your roof. We'll give you actual cash value.
Yeah.
Okay. But let's say if it's an older home, but the roof was redone in 2016. Well, they like that. Okay. So they're gonna be like, 2016, that roof's gonna be solid, it's gonna be good. And now they're getting so fancy, they use Google Earth to see if you have tree limbs hanging over your house. And that can in fact impact your rate.
I know, because
So,
we
yeah,
had to cut down the tree.
yeah.
Yeah.
And it'll tell me real time, okay, they have tree limbs, it's in poor condition, that's impacting your rate. So
I'm
just simple
tired of
things
y'all
like
with
that.
this Google pictures and Google photos.
Things that can save you, alarm systems. So if you have a central reporting alarm system, which means it calls the police, or you can see on a video, those things saves you money.
Mhm.
Water sensor. So other than fires, the biggest claim you see in homeowners is water damage, right? And it's usually coming up from your basement. You can get some coverage for that. It's called water backup sump pump overflow coverage.
Okay.
If it's coming up through your basement.
Yeah.
They have sensors now that you can just place on your floor. They cost you about $50, and it sends an alarm or an alarm to your alarm that there's water on the floor, and you can minimize that damage and not have that claim.
Cool.
Right. So they'll give you discounts for water sensors, smoke detectors, hardwired smoke detectors. So if your smoke detector is hardwired to your house, not just putting 9-volt batteries in it, you can get discounts for that.
Wow.
Oh, and then like upgrades to your electrical system and your furnace. So they do not like writing policies for people that have still using fuse boxes. So you need to upgrade your electrical panel to a circuit breaker, right? You need circuit breakers. And it's expensive, but
don't let you have a radiators and stuff, huh?
Well, some of the older homes you're gonna have boilers and radiators. They understand that. They don't mind that as much. They don't want kerosene and propane.
Okay.
Right, but they don't mind boil water heat.
Okay.
They prefer gas, but the electricity is important. So if you got knob and wire tubing, they won't write it at all. They don't want galvanized pipes anymore. So you need either copper or PVC. So all new homes are usually built with PVC, and then most of our older homes have copper. But you do see that galvanized pipe, they don't want that anymore either.
Yeah.
So just little things like that can impact your rate. And even if you're in the market looking for a house and you get the inspection report, you want to look for some of those things and then let the agent know.
Okay, cool. Yeah, that's good to know.
Yeah, because our daughter just sold her home, and that inspection says she had water from somewhere.
Yeah, they'll find it.
And they went,
they'll find it.
Yeah, they'll find it when you're trying to sell your house. They don't find it when you're buying one.
All right. So we in Michigan. We in the Motor City. I know everybody want to talk about car insurance.
Yes.
So let me get into some car insurance. All right. So the big thing here is people say, what's the difference between no fault, or they call it liability only, and full coverage? So that's just the terms we know, right? I just want no fault insurance, or I want full coverage. So what does that mean?
Yeah.
So what do you think no fault means?
Nothing.
Ain't my fault.
Ain't my fault. That's right. Nobody's fault.
Right. So we live in Michigan is a no fault state, right?
Yeah.
It's a no fault state. It's about, I think 9 out of 50 states are no fault states, which means that if we get into a car accident or a car crash, we don't call them accidents. If we get into a car crash, my insurance pays for my damage and your insurance pays for your damage,
Mhm.
right? So that's what a no fault state means. Now, if you go to a tort state or at fault state, then you have to, if I hit you, then you have to go after me for me to pay for your car, or I have to go after you to pay for my car. So that's the difference between an at fault state and a no fault state.
Okay, now, so a question I would have is that you hear all the time about people who get in accidents here, and they wind up in court about the deal, about especially if somebody was issued a ticket. So what's up with that?
So that really has nothing to do with, they just probably fighting because they don't want to be considered at fault
Mhm.
in the accident. And fault can be as low as, like, if you're 51% at fault and the other person's 49% at fault,
Yeah.
then you get that at fault ticket, you get that at fault accident, right?
Okay.
So a lot of times they're fighting over whose fault it was, or the other party, maybe they didn't have insurance at all,
Mm-hmm.
and they just want to get their deductible back. So you had a $500 deductible that you had to pay to get
Mhm.
your car fixed,
Right.
and they don't have insurance. You can go after them in small claims court and
Okay.
get your deductible back.
Okay. So that's probably the biggest deal, is trying to get that deductible back. Yeah.
Right. But
Okay.
yeah, so the no fault system is good in a way. Okay. And then full coverage simply means that you have property damage protection on your car. So you have comprehensive, which is anything other than collision. So glass breakage, vandalism, if you hit a deer, anything like that falls under comprehensive coverage. And then collision coverage means you actually collided with a vehicle or an object.
Mhm.
Okay.
Okay.
That's considered full coverage. So if you still have a lien, if you're buying your car, you still have a lien, or you're leasing your car, you must carry full coverage, comp and collision on that car, right? Because we're protecting the big things. Okay.
Mhm. Right.
So let's just say you have no fault and you got a loan on the car and you still owe $12,000. Car gets totaled, no comp, no collision, insurance company's not paying, and you got to come up with that $12,000 to pay the lien holder.
Yeah, we
Right.
got somebody that did that already.
Yep.
And luckily she hit the lottery so she could pay for it.
She
But
paid, yeah, but if she could have pocketed that money and just
yeah,
had
instead
the
of
insurance,
right.
yeah. So you hear those
Get to
terms,
work.
you
Mhm.
hear those terms, no fault, and then a couple of other coverages that they need to know. So no fault liability only. What that means is that's the minimum that you need to drive here in Michigan. So when you go to Secretary of State, they say, let me see a proof of insurance,
Right.
because you have to have liability coverage. Now that does not cover you, that covers the other party. If you
Mhm.
injure someone else in a car crash,
Mhm.
the liability protects you if they try to sue you. Okay. So here in Michigan, they can sue you for pain and suffering. So if you hit them, they can't go to work. They can't, their arms in a cast, they can't do their job. That's what they're suing you for.
Okay.
Okay. So the state minimum here in Michigan, it used to be 20,000 per person, 40,000 per accident. Okay. This past July, we had a new law passed, Michigan Auto Reform Law. So now the state minimum here is 50,000 / 100,000.
Okay.
Okay. So that means they'll pay up to 50,000 per person or 100,000 per accident. Okay. If you injure someone else
Right. Right.
in a car accident. Now, what I will say is, and I think one of my next things that's coming up is, don't just go for minimums. Okay.
Right.
The reason why, okay, we talked about, okay, you got this nice house now, right? And you got 2 or 3 cars, you got a little timeshare vacation home somewhere, and you carrying 50,000, 100,000 on your car insurance, okay, on your nice 2020
Mhm.
Escalade, okay? And then you get into a car accident, you slipped on some ice, hit somebody, and they got messed up, okay? They're gonna come after you. They're gonna come after you for more than $20,000 or $50,000. So let's say they came after you for 150,000. That's what the attorney wants. The insurance company was like, yeah, you messed them up pretty bad, and it was your fault. Even though you slipped on the ice, it was still your fault. They're gonna cut that check for 50,000 and hand it over to the attorney, and they're done with it. So now the attorney's gonna say, okay, Dixons, what do you have that we can go after to get the rest of this 100,000 that we still short, right?
Right.
And you talking a difference between $8 or $9 a month between carrying 50,000 and carrying 100,000,
Mm.
or carrying 100,000 and 250,000. So 250 is what they're recommending now in Michigan, because with that new law now, people can come after you if they got overdue medical bills because they don't have the type of coverage they should have had. So they recommending everybody raise their liability to 250,000 per person, 500,000 per accident.
Wow. Okay, so let me ask you about your list,
Mhm,
because I know, because you just brought it up about the reform that was just done.
mhm.
You got it. You got that on there, right? The other parts of it and how we.
Yeah, I got a whole packet for you.
Yeah, that's kind of why I've been just letting you go on and not asking,
Right.
because I know you got the information that folks
Mhm.
is looking for. So yeah, go ahead. I'll let
Okay.
you.
Yep. So with the new law here in Michigan that passed July 2nd, uh, so since 1973 or 74, we had a certain no fault law. But the thing about Michigan that made us unique from any other state in the country is we had unlimited lifetime medical coverage. Okay. So this is the Cadillac of auto insurance medical coverages.
Right.
If you got hurt in a car accident, this is first party. So if you get hurt in a car accident, your car insurance paid your medical bills. They paid for somebody to come take care of you. They paid your wages while you couldn't go to work.
Mm-hmm.
They came into your house and made your door wider or built you a ramp because you in a wheelchair now. So this is all from your car insurance.
Mhm.
Okay. Unlimited lifetime medical. It's expensive.
Yes.
Okay. And they realized that this was probably the most expensive part of your policy. So if
Right.
we were ever going to do anything about rates here in Michigan, specifically in Metro Detroit, we had to give people an option to lower their bills. And the way they felt that you can lower it was to reduce some of the PIP coverage. So unfortunately, they are taking something away from you to get your bill down. But when you got people paying more for their car insurance than they pay for their car note,
Yes.
you have to do something, right?
Right. Right.
So now every time you renew, you have to fill out one of these Michigan selection of personal injury protection forms. Okay. So you have to decide how much medical coverage you're going to carry on your car insurance. Okay. And you have 6 options. So you can leave it unlimited like it was prior to July 2nd. You can leave it unlimited. You can reduce it to a cap of $500,000 or a cap of $250,000. Okay. And that's a personal decision you need to make with you and your family and your agent. What's best for your family? Okay.
Yeah.
Outside of that, if you on Medicaid and everybody in the household has to either be on Medicaid or have their own other insurance with PIP coverage on it, okay,
Mhm.
you can reduce it down to 50,000. So now you're talking some savings. You're going
Right.
from unlimited down to 50,000. If your health insurance is considered a qualified health plan, okay, and what makes it a qualified plan is you have to have a $6,000 deductible or less annual deductible per person,
Okay.
and they have to be primary on the car accident, the injury. Okay, so some companies will say, yeah, I have less than a 6,000 deductible, but if you get in a car accident, your car insurance is going to pay first, and then we'll pay second.
Yeah, yeah.
So that's not a qualified plan. A qualified plan is saying we have no restrictions. We'll pay first, plus we have 6,000 or less. Now, if you have a qualified plan, you can completely, they call it exclude the medical portion of PIP. So if you got in a car accident, your Blue Cross would take care of you for your health
Mm-hmm.
related injuries, but you still get the wage loss and some of the other things that PIP provides, but you don't
Okay.
have to pay for the medical. Now, the creme de la creme is for my seniors. Okay.
Mhm.
If you have Medicare parts A and B, so you have to have both. So A is hospitalization and
Hospitalization.
B
Mm-hmm.
is the
Medical.
outpatient or
Mm-hmm.
home, right? You have to have Medicare A and B, and everybody in the household has to be under Medicare A and B. Then you can opt out of PIP altogether. So now you talk about cutting people's bills almost in half, right?
Mm.
Because they don't
Right.
have any PIP coverage.
Right.
But you have to decide, do I want that unlimited coverage or do I want Medicare to handle me if I got injured in a car accident?
Yeah. Yeah.
So that's an
Mm.
individual decision that you have to make every time your policy renews. And I'll just tell you, I've been telling my customers this is so new. So if you can afford to, just kind of wait a year and a half till we kind of see how some of this plays out, keep the unlimited or at least keep it to 250, keep some type of PIP,
Right.
just because Medicare has never paid for car accidents ever. So this is totally new.
Yeah.
So you just don't know how they're going to handle it,
Right.
And even if you're your own health insurance, like, so every time you go to the doctor or get treatment, you got a copay, right? So with the auto insurance, you have a deductible. Once you satisfy that deductible, you don't pay out of your pocket again for that
Right.
injury, right?
Right.
So like I have a family member who was injured pretty bad in a car accident over 20 years ago. He's still getting treatment to this day from 20 years ago from a company that he doesn't even have insurance with anymore.
Wow.
And they take care of him top of it and nothing out of his pocket. So if you can afford to keep the unlimited PIP, I recommend that you do it. If it's a financial hardship, then you can talk with your agent about some alternatives.
Yeah.
Mhm.
But that's the gist of it.
Wow.
Yeah.
Yeah. So yeah, people really got some serious thinking to do. And it's funny that because we had, when you get a taste of the best, it's hard to not have it anymore.
It is.
And so but the other side of it is, do you want to pay less for insurance?
Right. So I worked in claims, right? People would get injured in Ohio and would come to Michigan and say they got injured here.
Wow.
So that they could get their Cadillac of coverages.
Yeah.
Mm.
Always somebody trying to skirt the system.
Always. Which brings me to my next item. And it's simply called control your household.
Okay.
Control your household. Okay. So that means anyone using your address can impact your rate.
Yeah.
Or it can prevent you from excluding something like PIP. So let's say, grandma and granddad are Medicare A and B, they want to get rid of PIP, but 2 kids and 4 grandkids are all using their address. And those names are going to pop up in the household.
Sure is.
Okay? All right. And so now they can't exclude PIP anymore because you got younger people without Medicare A and B. So now they're going to end up paying a higher rate, So control your household there. And then, if you're using a different address.
Stop it.
I mean, technically it's insurance fraud, right?
Right.
So, and it can deny a claim, So if you say, I live in Brownstown and you live in Detroit, and then the car got stolen in Detroit, then you got into an accident in Detroit and somebody busted your window in Detroit, they're going to say something not right.
Yeah.
It's because prove to me that you live in Brownstown, and then they're going to say deny, deny, deny.
Yeah.
Or they're going to charge you the difference. They're going to say, oh, for this past year, instead of Brownstown, you lived in 48235. It's a difference of $1,700. So you pay us the $1,700 and we'll fix your window.
Your window.
Dang.
$150 window.
Lord, you can't even have from insurance companies now. I'm telling you.
They all talk, right? They have a system. They know who you've been with, how long you've been with them,
I know.
and what you covered. So a lot of people think it just by not telling me something that I won't know it.
Yeah, I know, because
I know as soon as you give me that address, everybody that's ever used that address will pop up in that house.
I know.
And one of the things that we've experienced is that for whatever reason, and I know it wasn't insurance related, but it was something. But wasn't insurance? It might have been before we got
I know. AARP did me that way.
Yeah,
And say,
right.
wait a minute, your son was in the ad. What? I'm talking about me. My son don't even live with me.
But they'll just like right to this day, we get mail here for Jason and for Jasmine, and neither one of them have ever lived here.
Right.
And Jasmine, matter of fact, Jason moved before we moved here. Of course, Jasmine's been in Chicago for 12 years or something.
It still gets mail.
We still get mail for her here.
Yeah.
So yeah, sometimes people try to be slick when they try to locate people and find an address where you used to live with this person.
Right.
So that can slip on your record.
It can.
Because was it you? Wasn't it you that contacted me and said there was some other name that popped up on my?
Probably, yeah. And when you first move, the people who lived there prior to are gonna pop up also.
Yeah.
Oh, okay.
Maybe 2 times before they're still gonna pop up. So I have the ability to go in and say no longer in household or doesn't live there or has their own insurance. I have some of that, but it's going to impact you. You know,
Dang, it's worse than the creditor.
they own it.
Y'all going back 10 years, 12 years too.
They own it. They own it.
Technology is too good sometimes.
It is. It's hard to beat the man. That's what they say.
I know,
Right.
yeah, you got to be a hacker, that's for sure.
Okay. So
Right.
my number 9 we kind of talked about was don't do the state minimums. You know, protect your assets, protect your
Right.
own health. You know, it's a few dollars more, but it's worth it if something does happen.
Yeah.
And then for 10, I have shop your insurance. Okay. So a lot of people had never heard of Goosehead Insurance.
Never.
I had never heard of Goosehead Insurance, right? So Goosehead Insurance is it's a brokerage firm based out of Texas, out of the Dallas, Texas area.
Mhm.
And it's actually the fastest growing brokerage firm in the country right now. So I'm a franchisee of the
Mhm.
Goosehead Insurance. So it's Goosehead Insurance Ron Betty Agency.
Mhm.
Okay. And the reason that I went the franchisee route is because when you're trying to get started as an independent agent, it's hard to get contracts with carriers. Okay. So you go to auto owners or AAA or Liberty Mutual and say, hey, I want to write insurance for you. Then they're like, okay, well, what have you done the last 5 years? What's your sales? How many
Mhm.
people are you going to hire? You know, they got all of these questions. So by doing the franchise route, they already have relationships with the carriers.
Mhm.
So as long as my criminal background checked out and my license checked out, I was
They
able to
threw
get
you a few
appointed.
of them.
Right.
Yeah,
I was able
okay.
to get appointed with them, and it's a lot easier to start for me. And then they also do my service work for me. So I don't have to hire, 4 people in the office. So every time you call to pay a bill, or if you want
Mhm.
if you want to change cars, you can just call the service team. They're open later than usually I am.
Mhm.
And that's what they do all day. So they're probably faster at it than I am.
Yeah.
So that's
Mhm.
kind of why I went that route. But it's an independent agency, it's a brokerage. So I don't work for any particular insurance carrier. Okay. So I'm a broker. I work for my clients.
Okay.
So I put your information in a radar system, and different companies come back with prices. Then I go into theirs and, fine tune it, give you some discounts. And that's how we do the insurance. So I don't work for the companies that I place you with.
Oh, okay.
Let's say a year from now, 2 years from now, their rates, they have 2 or 3 rate increases, they start going up. I can just move you to a different company, same agent, different company. I have no,
Yeah. 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 You
it,
ain't
it
loyal
doesn't
to
bother
that.
it doesn't bother me to, some of them pay different commissions, but
Mhm.
basically I just want to make sure I keep you as a customer,
Right.
for our lifetime together.
Yeah. Yeah. Well,
And
well,
you don't have to start getting a new agent every time,
right.
And then
Cool.
that last part of that I put is, you should really try to get an insurance professional, an agent, somebody that you can go to with all your insurance portfolio, and not just count on 1-800 numbers where you got, your auto here, you got your home there, you got your life insurance over here. I got a small
Mhm.
business. You're dealing with 5 different people, 5 different companies. If you can find someone that can, service all your insurance needs, or at least give you advice,
Yes.
good advice on, what you should have.
Right.
Mhm.
And I'm the kind of person that if you come to me and you've been with AAA for 20 years and you show me your deck page, I'll take a look at the price and I'm like, you know what? They're rewarding you for loyalty. You could switch to me and maybe save $6 or $7 a month, but you've been with them 20 years. I would recommend, you stay with them.
Right.
Let's talk in 6 months. If they're still going up, then maybe we can do something. And then the way I get something out of it is to say, hey, if you have family or friends that's looking to shop around, just give them my number, and
Right.
no charge for the advice. Because I should be charging for my advice, because I am a professional, because I got those 2 little things there.
That's
So you
right.
can just pay me in referrals.
All right, then. Well,
That's the proof right
thank
there on the wall.
you for.
But I'll tell you because when I came to you, I was with one insurance company and they just went sky high. I was amazed when I moved out of Detroit that my insurance went down for a hot second and then it
Right.
shot back up.
Shot back up.
And so then I went to another company, the name won't be mentioned because I'm not gonna give many props. And they gave me one of them little things to meter how my driving is. And they all came
Right.
back, oh, excellent, excellent, excellent. And then when it came time for me to get my final policy, I went from a 20% introductory discount to a 10%
Mhm.
discount, which means my insurance went up.
Right.
And so when I got with you, and this is a shameless plug. When I got with you, you looked over my stuff, and I got put it like this: I was paying less for 4 cars than I was for 2.
Mhm.
4 cars total coverage. I was paying cheaper than I was for 1 car with total coverage and another car with just no fault.
Right.
So you did wonderful stuff for me.
Yeah. So I'm no longer like giving away money for a Fortune 500 company, but I'm helping my family and friends and fellow Metro Detroiters save money. So that's still rewarding for me.
Yeah,
So that's
yeah.
why I do it.
Right. And we appreciate it because
Mhm.
the purpose.
And like you say, your goodness and all that special advice and helping the community, you will be rewarded. Yes.
Yeah. Right. And I like
Yeah.
it because I referred people to you, and I like the fact that you tell them what it is. Either I can help you or I can't help you.
Mhm.
Right.
And so
I got a brother I'm gonna send to you too.
and that's on them. If
Yeah,
you
it is. I mean,
if you can't help them, it's their fault.
I'm just saying,
or
Ron.
they might be getting a good rate already. you
Right.
know?
Mhm.
So all these insurance companies are fighting for the same people. Okay.
Right.
All right. So a lot of people that call me aren't the people that they're fighting for necessarily,
Yeah.
but
Mhm.
they want that, certain customer, and everybody will give that certain customer a good rate.
Yes.
But if you're not that customer right now, or no longer that customer, or you had a couple tickets, then now no one's fighting over you, and now you kind of scavenging for a decent rate.
Right.
And so that's where I can help people with that have some issues. But
Mhm.
I also want that customer too, because then
Of course.
everybody wants that
You know,
customer.
everybody wants that cover,
Sure.
like the creditors. Everybody want to give
Everybody.
that person
Exactly.
the credit.
Well, you deep in debt. I'll give you some more.
Right.
Right. So that's
Especially
cool.
since you don't use it.
Right. So now, where we at? Oh, wow.
Yeah.
Right.
Right.
I can
So-
talk.
That's all right. That's all right. It's important stuff.
Yeah, they need to know. Like
So-
you said, I need to refer my brother to you.
Right. So you slipped in the question thing my mother never told me a couple times.
Mm.
So if you got anything particular you want to address with that?
So, I was kind of thinking about that in preparation for today, and my love you, Mom. You did a great job.
Of course she did.
I just think like in our community, a lot of things are just taboo. Like we just don't talk about it. Okay.
Mhm.
Right.
Finances. So like when I was growing up, I never knew how much my mother made. And if I did, I didn't know if that was good or bad, right?
Right.
I didn't sit down and watch them pay bills and things like that. So I mean, talk about finances with your kids, because you can say, oh, mommy makes 35,000. They're like, wow, 35,000, like that's a lot.
Mhm.
But in the scheme of things, it may not be, right?
Mhm.
So you just need to have those conversations. She never really said, don't go to school and get all these credit cards, because
Mhm.
I had to be sharp in school. So I think it wasn't a Macy's back then. It was Marshall Field.
Marshall
So like
Field.
that,
Yeah.
Mhm.
I would
You
get my Marshall Fields card. I pay the minimum, then go charge something, right? And then once it got full,
That's how they did it.
I was like, okay, I want that shirt. It's $60. So I put $60 on the card. Bam, charge it right back, right? So my car stayed charged the whole time,
Mhm.
And then I'm an insurance guy, but I did some bonehead things with cars. I remember the one thing my mama did tell me was, don't leave your car on the street, right?
Yeah.
And it was like 1 o'clock in the morning. I'm like, I don't feel like going to move my car. I don't want to put it in the back.
Right.
Come out the next day, airbag gone, radio gone, right?
Yeah.
So that was something she did tell you. So, I did make those mistakes, but I think she did a pretty good job of giving me enough leeway and rope to figure some things out for myself.
Mhm.
I'm trying to be a little more hands-on with my kids, because they've been like super sheltered their whole life, and they just don't know what they in for.
Right.
So I have a lot to teach my daughter in the next 6 months before she goes away to college.
Oh my goodness.
Yeah,
Right.
can you believe that?
I
She has to go away
know.
to college.
Right.
Yeah, but it's a lot I need to teach her.
Yes. Yeah.
Yeah.
And we were saying a couple weeks ago that children that come up today, they have the benefit of having parents like you that have experienced a lot of stuff,
Mhm.
and it's definitely more stuff than our parents experienced. And so you have the ability to share more information with them, especially technology wise, and then just the way the world is. But by the same token, what you just said, they tend to be more sheltered than we were.
Yeah, because he doing like all parents. We try to protect our children from the
Sure.
outside. You know what I'm
Well,
saying?
the
We try
world
to,
crazy.
But you know what?
no,
They
but
don't
we
want to
can't
listen.
do it.
They don't ever want to listen though. I'm like,
No.
Of course we
you
ain't.
tell them we've been there, we've done it. I've made the mistake. Don't do it.
And
you
your
know,
mama told you the same
they know
thing.
better than you though, right? They know better than you. So sometimes you just gotta let them fall down and
You gotta let them fall out.
learn a lesson.
But at least you gave them that information.
Right.
See?
They can't never say, "Daddy never told me."
Yeah, right.
Right.
Things my daddy never told me. Well,
Exactly.
damn, he told me everything. I
I
just
remember,
didn't listen.
I remember my dad telling me that, and I had a lot of those moments growing up too.
Right. Well, I like that because you said things she didn't take, but she did take some stuff. You just didn't listen. So
Just didn't
Of
listen.
course.
that's part of growing up.
And that's always when it happens, right? It's always when it
Mhm.
happens.
So before we get out of here, we try to stick to our time, but whatever. Kappa, okay, that's cool. We had a lot of Greeks on here.
Mhm.
And you work with a nonprofit.
Yeah, so it's a new nonprofit started by one of my fraternity brothers called MyRamp, short for Michigan Reading and Math. I forgot what the P stands for.
Mhm.
Brand, but they are providing additional reading and math support for kids from kindergarten to 6th grade.
Oh, nice.
Because we know that they building prisons based on the 3rd grade reading level
Yes.
of our kids.
Everything.
Right.
Mhm.
Right.
So if the 3rd grade reading level is at a certain point, they know that's how many prisons they need to build in the future.
Mhm.
So this is a direct correlation. So this is our way of kind of trying to move that number in a more positive direction, get our kids back reading. It was funny because he's a tutor, and he was tutoring my daughter in some pre-calculus. And they spent the first 45 minutes of this hour session going over all of these things that was way over my head that I couldn't remember, right?
Right.
And then he was basically like, well, divide this into that or multiply this fraction. And she was like, I don't remember how to do that. You know, or we just use calculators now.
Right.
We just
right.
look on this
Some
website.
scientific calculus.
And so that's when he had the idea to start this program, because we've totally gotten away from just basic math skills, basic reading skills, because kids are so dependent on technology now.
Right. Right.
That they don't have those basic skills. I mean, you know.
Yeah, that's
And
technology.
the new math.
Right. Technology makes us lazy.
I like to go to McDonald's or a fast food place, and they give me my amount of money, and then so I'll give them the bill, and they let them ring it in, and I'm like, oh no, wait a minute, I have the change too, and then I watch them just sit there and sweat.
Right.
Because now the register is not going to tell them how much to give me back. They got to use math.
Yeah.
You know, and I'm gonna bail them out if they struggle, but it's
we do that.
Yeah.
right. You know,
We do
it
that.
happens.
Right. And you got and that's something they need to know.
They do. You need to know that.
You got to be able to think.
Yes.
Because if you can't think, then we'll be slaves to
'Cause
whatever.
Technology. Yep. If
Well,
they telling you something wrong, you don't even know it.
Right. And not even technology, but slaves to whoever got the microphone.
There you go.
Yeah, I don't want to talk about political area, but we see what's going on. A lot of people following only what they told, and they have no idea.
Media is powerful, and some of these leaders can be powerful in a bad way.
In a bad way. Yeah.
Oh yeah, you can always
Right.
have that.
And then the last you coach fast pitch softball.
Yeah, my daughter's been playing fast pitch softball since the 6th grade, and I've been coaching her travel team, so that's kind of rewarding just to see these young ladies grow. And you know, they're pretty good. They can throw harder than me and hit the ball off real far. It's, you know, don't underestimate them.
Don't underestimate none of these children these days. I'm telling you, Generation X or millennials.
There you go.
It's funny how our kids get us into coaching and stuff.
Yeah, you start out, you know, I started out just dropping her, and I'm like, well, it's all the way in Troy. I don't want to drive back home and come back, so I'll just sit here and watch. Then I see the coach out there by himself, and I'm like, you need some help? And he like, sure. And the next thing you know, I'm assistant coach of this team. And she like, Daddy, how you always work your way into coaching my teams? But see, it helps with the politics of it too. Because
yes, it does. Yes,
that stuff gets real political, and I'm all right. I'm on the inside now, so I make sure she got a spot and she gets some playing time, right?
Yeah, that's what I'm saying. We did that for our daughters at Oxford.
Right, you can't stop the politics, but you can make sure you get a little bit of a skin in the game.
There you go. That's it. Put your skin in the game.
Right. So we right there, Ron. We appreciate you coming in. You got anything else from Tina?
I just want to know, Ron, are they still redlining us?
We don't use
want
that word. That word doesn't exist. So what I'll say about that is, okay, it's true that the closer you live to the city, usually the higher your rates. But there is a method to that. It's because you have so much more exposures than people that live further away. Okay.
Mhm.
So you got 700,000 people in Detroit and 88,000 people in Southfield, and you work and live in Southfield or Detroit, you coming across a lot of drivers, a lot of things can happen. You got way more exposure than somebody who lives out, up north in a town of 900 people. Okay. So that's one of the reasons that you pay more. And if you listen to any insurance company, they'll tell you they never make money in Detroit. They say they always lose money. And that's
Of
because
course.
people have figured out the system. Okay. So auto shops, doctors, physical therapy places, they know how to work the system, right?
Yes,
They know
yes,
how to
yes.
take a one fender bender and everybody gonna get paid on it. Okay.
Mm.
Well, that comes back to me and you, good customer. Somebody has to pay for it.
Right. Yeah. Yeah. I know. I took my car in for some other work, and I had a problem with the car. So I asked them, how much would it cost to fix this? And they say, you putting it on your insurance?
Yeah.
And I said, well, how much is it gonna cost? Well, if the insurance company pay for it, it's gonna cost this much. But if you paying for it, it's gonna cost this much. I said, okay, how about this? I'm not doing it at all. Because automatically you telling me did you scam it?
Mhm.
Yeah.
It should be the same price.
It's bad. I spent some time in special investigation claims, and it's bad. Same thing with the doctors though. They're like, you hurt your back. Were you getting something out of your trunk? Because if you were in your car getting something out of your trunk and hurt your back, your auto insurance can pay for that.
Mm.
Oh, really? So that's what we've been dealing with for years.
Yeah.
So that's the other side of the
No, I
argument
don't
that you
need
don't
it. Yeah,
talk
see,
about.
I didn't know all that extra
Oh,
stuff
please.
was going
But
on.
I'll
knew
say,
some, I know some scheming, but
and I'll say this too. This your area, but we had this almost happen to us. Don't let folks just say they live at your house, because they'll mess around and get an accident, and then if they get in a lawsuit, they'll come after your insurance because they live in your house.
Mhm.
And then you're gonna pay for something you ain't have anything to do with.
Right.
But you were saying that earlier. But in a practical sense, a lot of time we let folks use our address, and if they get in trouble, then you'll wind up being sued for it because they got it. Something happened to them.
Mhm.
And if they don't, and not that they're on your insurance, they don't have insurance.
Right.
They don't
Yeah,
have
that too. That too. And when they look up the address that they're using, it's gonna come back like, well, he got insurance.
Yeah.
They live in the same house, especially if you're
Yes.
related. If you're related, they really can try to come after you.
And those are the scheming insurance agents.
Well, the scheming lawyers.
Yeah.
Because everybody know the system.
It's big business here. It's big business, and that's why they fought this change. It's so hard because people have built careers and in the whole industry. I mean, it's a physical therapy place on every corner now, right?
Right.
Because everybody automatically gets 6 weeks of physical therapy. They need somewhere to go, But it's probably gonna change a little bit.
Right. Mm. So as we all
and don't let them tow your car either.
Right.
We had so many family members calling us, and then we had lost all our towing.
Yeah,
They said you had too many.
Can I use your
tolls
AAA?
at-"
Right. Get your own AAA.
Right. Then it comes time for you to get your car towed.
We
You
couldn't
ain't
get
got
our
no.
tow. They
Exactly.
Exactly.
Yeah. Right. So we always do. Is there anything else that you want to share with the listeners that you haven't shared or that you just want to emphasize?
I just want to tell everybody to keep tuning in. You guys are been great uncle and aunties to me for years, church family members, and now my clients. So I'm blessed to work with you in that way, and I'm glad to see you guys are still doing your thing. Y'all too young to be all retired and stuff.
we probably working harder now than we did.
Right.
You ain't never lied.
I would just say keep up the good work, and you guys, if you have insurance questions, give me a call. I'm sure you'll be able to post my phone number on there, 313-528-3051. Call Ron.
Yes, sir.
All
Yes,
right
sir.
then. Yeah,
And-
you got my brother coming your way.
Right.
All right.
Right. And I didn't ask. I know Brandon's probably put out there. If you have any questions, don't be scared. Give Ron a call. He'll answer them. It ain't gonna cost you nothing. Just
Referrals.
a referral. That's it. That's all.
That's it.
That's it. That's it. Scratch my back, I'll scratch yours.
That's right.
All right, Ron. We appreciate you coming on.
Yes.
All right.
You have some good information for the folks, especially for because some folks just don't know. Some folks avoid trying to know, but you have some good information. So
Thank you.
Yeah.
Yep. Have a happy holiday. Be safe.
All right,
Yes, sir.
you too. Thank you.
Tell Mo-
Thank
Nick-
you.
Tell Monique we said hey.
Yeah.
Will do.
All right, you take
All
care.
right. Thanks.
Bye-bye.
Bye.
See you, Linda.
Bye.